It's nearly the end of April and Tesla's just released its official first quarter results for 2020. And with much of Tesla's facilities unable to produce their usual output due to coronavirus, not to mention deliveries hampered by the same terrible pandemic, Wall Street has been very eager to see just how Tesla's doing, especially as it's one of the first automakers to release its first quarter earnings report for this year. Although I should note that Ford announced its yesterday, beating Tesla by a day. As usual, I've gone through Tesla's figures and picked out some of the salient bits to share with you here. First, let's look at production and delivery figures. According to Tesla's official ledger, the company produced a total of 102,672 cars during the accounting period, split between 87,282 Tesla Model 3 and Tesla Model Y combined, because Tesla doesn't break these two models apart, and 15,390 Model S and Model X combined. This represents an overall drop in production of 2% compared to the end of 2019. But interestingly, it's not Model 3 or Model Y leading to that drop, as Tesla's production of these two models has remained pretty consistent. It's gone up by just 324 cars. No, it was the sizable 14% drop in Model X and Model Y production that pulled those overall figures down. Year on year, though, I should note that Tesla is 39% up with its Model 3 and Model Y production, and despite the drop from the previous quarter, 9% up on Model S and Model X production from this time last year. Considering Tesla shut down its Giga Shanghai production line, where Chinese market Model 3s are made, on January 29th, not opening it again until later last month, and its main Fremont production facility halted car production on March 23rd and is yet to reopen, the real news here is that Tesla is only marginally down on its previous quarter production figures, even though its facilities suffered unexpected closures. Deliveries also suffered during the first quarter when compared to the previous quarter, again due to the coronavirus. In total, 88,496 Teslas were delivered around the world, with 76,266 Model 3 and Model Y combined, and 12,230 Model S and Model X. Overall, this was 21% fewer vehicles than delivered in Q4, but again, with coronavirus impacting delivery speed and Tesla being forced to carry out contactless deliveries, it's still not terrible given the current circumstances. I should note here also that Tesla finished the quarter with 20 days of supply in inventory. That is a measure of how a company is handling production versus sales. It's actually calculated by dividing new car inventory by the previous 4 quarters of deliveries over 261 days. Previously, the figure hasn't really been paid a whole lot of attention to by Tesla, but 20 days supply as an auto industry standard is a pretty healthy figure. Too small and it would suggest the car company isn't meeting demand. Too high and it would suggest that cars aren't being sold. In the case of Tesla, 20 days supply is about right. For reference, Ford's current inventory is about 32 days supply, while Toyota's is a surprisingly large 54 days and Porsche's a massive 76 days. These figures represent a total automotive revenue of $5.13 billion and an automotive gross profit of $1.31 billion, which represents an automotive gross margin of 25.5%. That, for those who aren't sure, is essentially a measurement of the profit that an automaker makes based on the money it spends on building the cars in the first place. That figure is helped by the fact that Giga Shanghai's automotive margin dramatically improved during Q1 as the production line ramped up its speed. Because like any new production line, Tesla's Shanghai facility began with a low output and high cost, but as production problems were ironed out, the facility is now operating far more quickly than it once was. On a wider scale, if you look at the money spent by Tesla on its various construction projects, an expanded charging network and service network, the company's free cash flow fell to negative $895 million during Q1, pushed partly by the increase in inventory stock and poor market at the end of the quarter. That said, however, Tesla raised its cash and cash equivalents to just over $8 billion, which is an increase of $1.8 billion compared to the previous quarter. So where does this leave Tesla financially? According to the GAAP method of accounting, a profit of 9 cents per share and a profit of $1.24 per share if you use the non-GAAP accounting system. What's worth noting here is that while this is a massive drop over the last quarter, 85% and 42% less, respectively, it's a massive improvement on this time last year when Tesla's losses had ballooned to $4.10 per share and $2.90 per share, respectively. It is, Tesla notes, the first time it's made a profit in the first quarter using both GAAP and non-GAAP accounting systems. And to be completely frank, the fact Tesla turned a profit, albeit a small one, in the current economic climate, well, that's bloody good. What else can I tell you? Well, Tesla isn't making forward-looking statements beyond the current quarter we're in for obvious reasons, but it did share images of the rear of a Tesla Model 3, which is composed of 70 distinct pieces of metal welded together, versus the rear of the Tesla Model Y, which is built from just 2 pieces at the moment, and eventually, says Tesla, will be 1 piece. This is phenomenal progress made possible thanks to Tesla's acquisition of various tooling companies and quite considerable process work that's resulted in, for now, 2 massive aluminium castings, one for each side of the rear of the car. These are made by some of the world's largest casting machines and not only reduces complexity for the manufacturing process, but actually improves strength, as one casting is always going to be stronger than lots of small pieces welded together. It also makes it quicker for Model Y to be produced and could reduce construction costs, which of course would then improve Tesla's automotive gross margin, which, to be honest, is pretty healthy right now. For shareholders, that's a great thing. Other news? Well, in the earnings call after, Tesla confirmed that its 100,000th Powerwall has been installed and that the current generation Raven-based Tesla Model S Long Range Plus could have achieved an official 400 miles EPA rating. But, according to Elon Musk at least, the EPA, while taking part in the test process, left the doors open and the key inside the vehicle between tests, which resulted in the car remaining on and draining a claimed 2% of its capacity. That seems like a lot to lose from simply vampire drains, which does suggest that the car may have been left on overnight or even for a longer period of time, but that's not clear at this time and I'm not going there in this video. The other news, one that isn't so positive for Tesla, is that the Semi has now been pushed back another year, meaning that it won't arrive until 2021. That's 2 years behind Tesla's original goal. While Tesla is expanding its production facilities around the world to produce the new Roadster, the Tesla Semi and the Tesla Cybertruck, I'm guessing the current crisis will slow that down. So we shouldn't be surprised if Tesla's future vehicles all get pushed back quite considerably. So there you have it, an overall positive quarter for Tesla in what has been a very trying couple of months for any business. And as I've said before on this channel, the coronavirus pandemic doesn't look to be the death knell for Tesla that some had predicted it would be. As long as Tesla follows recommendations about social distancing, which isn't a given considering how much Elon Musk has been actively vocal about freeing America and going back to work and opening things up, well, then we might be in for an interesting time. But Q1 figures? I'm impressed. Are you? Let me know your thoughts to this quarterly earnings and what do you think the next quarter will hold? Leave your thoughts below. Well, that's it. Thanks for joining me and I'll see you next time.